Well, howdy there folks, and welcome into today's video. I hope everybody's doing great as always out there. In this video, I want to talk quite a bit about the time period we're going through right now here in 2022. We're in May of 2022 now, and I want to talk a bit about the time period we're going through, and the reason being is the time period we're going through right now, this has been repeated throughout history, and I think if you understand history, you can start to begin to understand what's going on in the market right now, how this is going to play out, and the tricks your mind is playing on you in the psychology of being an investor in the market. And kind of, if you understand these things, you can avoid pitfalls that could end up, obviously losing you a lot of money or preventing you from a lot of gains down the road and those sorts of things. So yeah, I hope you guys get a good amount of value out of today's video. Also, if you're looking to sign up for FTX US, the crypto partner of the channel, check out first link in the description down there. Right now, they got a deal going basically where you trade your first $10 of crypto, you get a free coin of some kind, 85% lower fees than competitors, and 24/7 customer support. NASDAQ here today is actually out of nowhere just had a good day. Okay, we were just on this vicious downtrend, and then just at the very end of the day here, we just went up and up and up and up and up and jumped several hundred points in a matter of the last 30 minutes, 45 minutes of trading, which was pretty amazing to see. Now, I think most people are looking at that and they're like, give me a break, dude. It's just going to be back down again tomorrow, right? And that's kind of the market we're in right now, where, even myself, I look at it and I'm like, come on, man. When you've been in such a vicious downtrend, which the NASDAQ for reference is, it's had the worst, basically through January 1st through the end of April, that's the worst 4 months in the NASDAQ history. I couldn't find a time period ever worse. That goes back to the tech bubble. That goes back to 2007, 2008, 2009. That goes back to even that goes even back to the first 4 months of 2020. There was no time period worse than those first 4 months from where we were at to where we ended up at by the end of the April, essentially. Never been a time period worse. And so, when you're in that sort of market that you start to even see a rally, right? And a good day like today where out of nowhere the market comes back and no one has faith that that is even a real rally, right? We just all are kind of at a stage where we're just like, whatever, it's probably not even going to stick. It's probably just going to be down more tomorrow, right? Now, I wanted to pull you guys up some interesting kind of charts here on just kind of like investor psychology, right? And it's like, the price is going up. Let's watch the market. The trend is holding. I'll buy a consolidation. Damn, I missed consolidation, but if I wait any longer, I won't profit from the trend. Let's buy. Good thing I didn't wait. I bought, right? And then it's like, I'll increase my position. Brilliant at this price. Let's double it. Ouch. As soon as this goes back up, I'm selling it. I don't believe it. It's down, to another low price, right? Where's the SEC? Enough, I'm selling out and I'm staying out. And then, it goes down even more and they're like, good thing I sold everything. And then it goes up and they're like, it's going to take anyways. And it's down. And they're like, I told you so, right? And then it goes up more and they're like, what? And, I've been through that cycle before in the past 14 years with stocks. I definitely was in that cycle in 2015. I was definitely in that cycle with a stock or two prior to that time period as well. But 2015, I definitely went through that as well, right? This is kind of almost like the end of 2020 into the very beginning part of 2021. I would call January, February of 2021 right here. And this was kind of the end, like November, December of 2020, essentially, right? Where you had the excitement, the thrill, the euphoria was that last stage. That was, like I said, the blow off top of January, February of 2021, right? And then from there, we've just kind of been in just a downtrend, a vicious downtrend. Small caps, speculative stocks, mid cap stocks, those were kind of the first to get hit, and then we just kind of went along, and then just almost everything started getting hit, right? And right now we're definitely at kind of this bottoming out stage where you're just, no one really believes in any sort of rallies. No one believes in any optimism anymore, right? And, I was looking at this one, and this reminds me of so much of what the time period is we're going through right now, essentially, right? Where, it was kind of like people started preaching, you need to be long, but only defensive names, right? And, what's interesting is I feel like we haven't really got to this stage yet, right? Where a lot of folks are just going short and like doing put options and things like that. Maybe that's the final stage we have to kind of go through here, but definitely this stage we're already in and have been going through, where people are like, if you're going to go long, you got to only be defensive names and Coca-Cola and Pepsi and like the quintessential Johnson and Johnson, Procter & Gamble, like the most boring stocks, and that's what people start preaching. So, and at the bottom, people start saying buy and hold is dead, right? And the reason people start saying buy and hold is dead It's just because buy and hold, just you continue to lose money, and your stocks continue to go down. And so people start saying, and it's stupid. It's so stupid, like people say that, but it's what ends up happening, right? Where people start saying buy and hold is dead. You should have been shorting. You should have been buying puts. You should have been trading the market because there's a lot of volatility in the market. And look, if you sold here and you bought here, you could have made 5%. You could have made 3%. Instead, you just are holding. You're just going down, 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 down. And as the market just continues to go down, the Russell, the NASDAQ, whatever, S&P 500, you just continue to get devastated, and people start saying stupid stuff. I mean, that's just the best way to put it. It's just stupid. But they start saying stuff like that. Buy and hold is dead, and you start hearing things like that, right? And then all of a sudden it's like stay tactical, but sell into rallies. Then all of a sudden it's like, oh yeah, you need to buy quality stocks. Then all of a sudden it's like it's a stock picker's market, and then all of a sudden buy and hold is back, right? And then you start going through the cycle again, buy and hold, but you got to be selective. And then it's like, oh, go long, but only defensive names. And then by the end of the cycle, it's like, oh yeah, buy and hold's dead, right? It's, definitely seen that before. And it's funny, even when I got in the market 08, 09, that's how people were talking. They were like, buy and hold is dead. I obviously didn't believe that. I was, studying a lot about Warren Buffett and his philosophies and those sorts of things. And so I understand how a lot of folks got to that point where they were talking about buy and hold is dead because the market just kept going down, 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 down. And the only way you could really make money at that time was going short or buying put options in 08, 09, right? And so people are just like, buy and hold's dead. Obviously it wasn't dead. It was never dead, but people start talking like that, right? I put this little chart together. This is my own personal one I put together here, okay? And it's kind of like you start looking at a stock, right? And I definitely know a lot of people that have been through this cycle, and then you buy some shares and it goes down, and you buy some more shares, then it goes up above both cost bases, and you're like, I'm a genius, right? And then it goes down again, you're buying more shares, and then it starts going up, you're like, here we go again, I'm a genius again, right? And then it goes down, and you're like, people started saying phrases like the Warren Buffett, famous one, be greedy when others are fearful. And I put an LOL at the end of that because, that's a phrase that really comes in when stocks are down like 30, 40, 50, 60%. That's when you start using phrases like that. But a lot of people like to use it when a stock's down like 10%. Usually that's just folks that are newer to the market. If a stock's off 10, 15, 20% from its all-time highs, you're not being greedy when others are fearful. That's a term that's used when the market's in a vicious bear market and stocks are just getting absolutely shredded and your stocks are down 40, 50, 60%. That's when that phrase is used, just to be very, very clear, right? And then it falls a bunch more and folks start saying, this is the bottom. There's no way it can go lower. I'm going all in, right? And then it goes down more and folks start saying, you know what, I think I might sell, man. And this is one that if somebody was actually a hold and, this person finally is just like, I'll just hold it, right? And then stocks start going up and people say it's a fake rally. It's going to go down more. And you're in a disbelief cycle, right? And so kind of like the NASDAQ being up today, it's just kind of like, it's been so vicious. It was just all in disbelief where it's like, I don't know if that's real. It's probably just one day fake rally and we'll be right back down tomorrow, right? And then, still don't kind of believe it when it starts going up more. And then it goes up even more. And people are like, what is this, a trick or is this a treat? Like, what's going on here, man? And that's the cycle you get in. When you've been in, let's say a stock's downtrended for a year, 2 years straight, let's say, for instance. When it starts finally going up, just people don't believe it. Because you've probably seen a lot of bounces and bounces and bounces and bounces. And every single time it bounced, it went down more. And it bounced and it went down more. And so the thing you got to understand is, it's definitely not the right way to think, but you got to understand how some folks get to that place. Because if every single time you buy a stock and it goes lower, and every single time it bounces, it goes lower ultimately, I can understand the thought process of as humans, we're taught, like if something continues to happen over and over and over again, we think that's going to continue to happen, right? And so, I mean, imagine you flipped a coin 10 times and every single time it came up heads. Eventually, you're just going to start thinking, oh man, I guess this coin, is just going to keep coming up heads. And eventually, obviously, it doesn't, right? But that's the way people start thinking about stocks and the market in general, right? When it just goes down and down and down. And every single bounce, it goes lower. And bounce, it goes lower. And it's like you take one step forward, 2 steps back. When you're in that sort of market, people will just start giving up and they start disbelieving any sort of rally, any sort of optimism, right? This, to me, was one of the most telling things I've seen in the stock market in a long time about the cycle we're in right now, okay? This was actually posted in the private group Discord chat this morning. Somebody in the TTCF chat did this, right? Now, the high majority of people that are in the TTCF chat are bulls on Tattooed Chef long term, right? But everybody's in such a big disbelief cycle, even that are shareholders of stock right now. This gentleman says, will we see $5 or squeeze back up to $10, after earnings, essentially, because earnings are in, a little over a week from now, or around a week from now, right? And 18 people said we're going to 5, and only 10 people said we're going to 10. And that's just how much of a disbelief cycle we're in, that even bulls in a stock like that are just like, here's the thing, it just goes down and down and down. So if it just goes down and down and down, what are you going to start thinking naturally? Of course, the majority is going to start to move to it's going down and down and down, right? And so that's how, I remember even when I got in the market 08, 09, folks were still talking like it was going to keep going down. And even when we started getting the rally in March of 09, almost everybody was still insanely bearish on the market, like insanely bearish, like overwhelmingly bearish, and hardly anybody was bullish on the market, even when things started to go up again. And the reason being is it was just like people had just seen a downtrend. It just get worse and worse and worse. And so you start just disbelieving anything good, you can't even believe it. You don't want to believe it almost, you almost kind of start getting addicted to the pain, I guess you can say, right? Where, you lost all faith that a stock price can go up and it can be sustained to go up and those sorts of things. And I understand it. Like, I get it. Like, that's human psychology at the end of the day, right? I did a video recently. It was either this video or it was one of these videos here, and it touched on where the NASDAQ through essentially the first 4 months of the year. One of the main things I'd like to touch on was just, the NASDAQ's, we've never seen the NASDAQ go down this much through the first 4 months of the year, okay? But the second thing I was talking about is kind of investor sentiment in this sort of market, right? And, when you start talking about almost 60% of investors are bearish on the market over the next 6 months, that's just devastating. Just everybody's just bearish. And I went back to March 5th of 2009, that week ending essentially. And that was a week in which we had actually hit 70% of investors were bearish on the market through the AAII investor sentiment, which was just an incredible number. And this past week, only 16% of investors bullish on the market, right? So, there's just nobody that's bullish on this market. And when you see a market just go down and down and down, a lot of people just, like the high majority, it's hard for them to stay bullish. It just really is, right? When you just see stocks go down again and again and again, it's almost impossible to be positive out there, right? I want to play you a couple great clips from Peter Lynch here for just a moment. I think, Peter Lynch is somebody that was obviously in the market for a long, long time. And you can learn so much from folks like Peter Lynch, Warren Buffett, other investors that were in the market for decades and decades, because the things they describe they tell you, you start to realize, oh man, this time period we're going through right now, they went through these time periods before, and actually even more vicious time periods, and they have a lot of knowledge on these.
And then I want to conclude with, there's always something to worry about. If you own stocks, there's always something to worry about. You can't get away from it. What happens in the 50s, people were worried about, the only reason we got out of the Depression was World War II. We had another recession in the early 50s. They said we're going to go right back into a depression. People were worried about a depression in the 50s, and they were worried about nuclear war. I mean, back then, the little warheads they had then, they couldn't blow up McLean, West Virginia, or McLean, Virginia, or Charlestown. Now, all these countries that end in STAN, there's 9 of these STAN countries that have come out of Russia. They all have enough warheads to blow the world up, and no one worries about it. When I was a kid, people were building fallout shelters, and we used to have this civil defense drill. Remember this one in high school? You'd get under your desk. I never thought even then that was a particularly good thing to do. If below us, somebody put a hat, we'd all get under our desk. But in the 50s, people wouldn't buy stocks, except for the 80s. The 50s was the best decade of the century of the stock market. And people wouldn't buy stocks in the 50s because they were worried about the nuclear war and they were worried about the recent depression. Then people, remember when oil went from 4 to 40, and it was going to go to 100, and we're going to have a depression. Remember that one? Well, about 3 years later, the same experts, now higher paid, oil's now at 10, they said it was going to 4, and we're going to have a depression. And then the Japanese, remember how the Japanese were going to own the world? Remember that one? And then we have a depression. And then about 2 years lator, we're all worried about Japan collapsing. This is the most absurd thing I've ever heard. It's a company with a 20% savings rate, incredible workforce, incredible productivity. And people were saying we're going to have a depression because Japan's going to collapse. And they had, on their prayer list, they loaded Mother Teresa and crippled children, and they were praying for Japan at night. It's unbelievable. I mean, the LDC debt. Remember the LDC debt? Remember that one? All these countries, all Chase had lent their net worth to Brazil, Chile, Peru, and all these other countries, and all the other countries. And LDC said they were not going to pay it back, and we're going to have a depression. It always ends in we're going to have a depression. Or the Great Depression. We're going to have the Great Depression. I never could understand that adjective for depression, but the Great Depression, the big one. The big one's coming. But all these countries, and now I understand, these are called then they were called less developed countries. Now we used to call them underdeveloped countries. Those are all wrong terms. Those are not politically correct. You have to call these emerging countries. You can't use less developed or underdeveloped because that's. In fact, the other day I heard the politically correct term for somebody that's overweight is laterally challenged. That's so there's always something to worry about. And the key organ in your body in the stock market is your stomach. It's not the brain. If you can add 8 and 8 and get reasonably close to 16, that's the only level of math you need to know. You don't know to need the area under the curve. Remember that quadratic equation and the integral calculus and the area under the curve? I mean, whoever kid was under the damn curve. I mean, but you had to study this. You don't need this in the stock market. So all you have to know is you're going to see it's always going to be scary. There's going to be always something to worry about. And you just have to forget all about it. Cut it all out and own good companies or own turnarounds. Study them and you'll do well. And that's all there is. And I'm ready for questions.
Okay, thank you.
Yeah, so, in that clip there, obviously, very self-explanatory. There's always something to worry about in the stock market. Obviously, we have a million things to worry about right now in the stock market. But the thing to understand in the stock market is there will always be years you have to worry. And what we're going through in 2022, it's a long list of things to worry about, but nonetheless, like next year, you realize there's going to be things to worry about as well, right? 2024, there will be things to worry about. 2025, there's going to be things to worry about. 2026, there's going to be things to worry about. 2027, there's going to be things to worry about, right? And so there's certain time periods where maybe we have more things to worry about than others, but I can promise you every single year for the rest of your life, there's going to be things to worry about. And I think that's very important to understand because, if you're going to be in the market, you got to understand like this is part of the process.
These things come along, and it's just mind-boggling. People throw it away. One of the things I find a couple of rules I want to throw out that I find useful, excuse me, is a lot of times people buy on the basis the stock has gone down this much. How much further can it go down? I remember when Polaroid went from 130 to 100, people said, here's this great company, great record. But if it ever gets below 100, just buy every share, and it did get below 100. A lot of people bought on that basis saying, look, it's gone from 135 to 100. It's now 95, what a buy. Within a year, it was 18. And this company, no debt. I mean, this company was just so overpriced, it went down. I did the same thing in my, I think my first or second year of Fidelity. Kaiser Industries had gone from $26 a share to 16. I said, how much lower can it go at 16? So I think we bought one of the biggest blocks ever on the American Stock Exchange of Kaiser Industries at 14. I said, it's gone from 26 to 16. How much lower can it go? Well, at 10, I called my mother and said, Mom, you got to look at this Kaiser Industries. I mean, how much lower can it go? It's gone from 26 to 10. Well, I went to 6, it went to 5, it went to 4, it went to 3. And I am fortunate this happened rapidly. I would probably be still caddying or be working at the Stop and Shop, but it happened fast.
That's me with the Chef at 7 and Oatly at 3 and Honest at 3 or 4, Planet at $1. I'm like, Mom, you got any money? No. Oh, God.
It was compressed. And at 3, I figured out, there's something very wrong here because Kaiser Industries owns 40% of Kaiser Steel, they own 40% of Kaiser Aluminum, they own 32% of Kaiser Cement, they own Kaiser Broadcast, they own Kaiser Sand Gravel, Kaiser Engineers, they own Jeep, they own business after business, and they had no debt. Now, I learned this very early. This might be a breakthrough for some people. It's very hard to go bankrupt if you don't have any debt. It's tricky. Some people can approach that. It's a real achievement. They had no debt, and the whole company at 3 was selling at about $75 million. At that point, it was equal to buying one Boeing 747. I said, there's something wrong with this company selling for $75 million. I was a little premature at 16, but I said, everything's fine, and eventually this worked out. And what they did is they gave away all their shares to their shareholders. They passed out shares in Kaiser Cement, they passed out shares in Kaiser Aluminum, they passed out the public shares in Kaiser Steel. They sold all the other businesses, and you got about $50 a share. But if you didn't understand the company, if you're just buying on the fact the stock had gone from 26 to 16 and then it went to 10, what would you do when it went to 9? What would you do when it went to 8? What would you do when it went to 7? This is the problem that people have, is they sell stocks because they didn't know why they bought it, then it went down, and they don't know what to do now. Do you flip a coin? Do you walk around the block? What do you do? The psychiatrists haven't worked so far. I've never seen them running in. The psychological psychiatry fund I've never seen listed for with the SEC to make it through as a mutual fund. So they haven't seemed to help. I've tried prayer. That hasn't worked. So if you don't understand the company, you have this problem when they go down.
Yeah, obviously, huge truth statement there in that one, and something we're all, a lot of folks have gone through in the past year and a half in the market, where countless of these stocks have gone down, and folks are just like, what do I even own here, right? And it's very easy to just buy anything when the market's going up and everything's going up. Much different situation when you're starting to lose money and your stocks are going down, your value is going down, and it's like, wow, I put $1,000 in a stock and now it's worth $500, now it's worth $400, right? And that's what I call a moment of truth for stock market investors out there. When you got to figure out, are you buying the stock? Are you just holding the stock? Are you selling the stock? If you're selling the stock, is it really the fundamentals got that bad that it's, if you're down, let's say 60% of stock, did the results miss that bad that you've got to sell a long-term investment because it's down, 60% or something like that? And I think those are kind of, good things to keep in mind there. And in the stock market, never say never, which is reason I never say like, oh, this stock is absolutely at a bottom here, or this stock can't go any lower, something like that. Never say never. It can always go lower. Never say no. I've also seen other people saying things like, oh, this stock's never going to reach back to this price before. And it's just like, I can just tell, like, when people are pretty new to the stock market, like in their first couple of years or something like that, because anybody that's really been doing stock market for a long time, you never say never, okay? Never. It's just like a huge, that's like the cardinal sin. You never say a stock is at its lowest it will ever go, and you never say like, the stock is never going to reach back to this price again. It's just like the cardinal sin 101. If you guys don't take anything else from this video, always remember, never say never in the stock market. Trust me on that.
Wait a second. I can make some money. When an industry goes from terrible to mediocre, the stock goes north. When it goes from mediocre to good, the stock goes north. And it goes from good to terrific, the stock goes north. There's lots of ways to...
Yeah, that was just a little truth statement there.
The market's had 50 declines of 10% or more. So 50 declines in 93 years. But once every 2 years, the market falls 10%. We call that a correction. That means, that's a euphemism for losing a lot of money rapidly. But we call it a correction. And so 50 declines in 93 years, about once every 2 years, the market falls 10%. Of those 50 declines, 15 have been 25% or more. That's known as a bear market. We've had 15 declines in 93 years. So every 6 years, the market's going to have a 25% decline. That's all you need to know. You need to know the market's going to go down sometime. If you're not ready for that, you should own stocks. And it's good when it happens. If you like a stock at 14 that goes to 6, that's great. If you understand the company, you look at the balance sheet, they're doing fine. You hope to get to 22 with it. 14 to 22 is terrific. 6 to 22 is exceptional. So you take advantage of these declines. They're going to happen. No one knows when they're going to happen. It'll be very, people tell you.
Yeah, I mean, that's a great kind of last point there Peter Lynch makes. It's just factually based on data. About every 2 years, you should expect 18 months to 24 months. You should expect a correction in the stock market, meaning the indexes go down 10+%. We've gone through that essentially now as of basically the last trading day. Okay, the Dow was down well over 10%. The S&P 500 was down 14%, 15%, something like that. The Nasdaq was down 23%, 24%. And this was as of last trading day of April, and the Russell was down 24-ish% or so as well. Okay, so we've already gone through a correction now, and two major indexes in bear market, and we'll see if the other two go in bear market. But you got to understand, these are things that happen. Bear markets happen, corrections happen, and you should come to expect them. And if there's one thing history has taught us time and time again, it is you have to buy corrections and you have to buy bear markets. And if you don't, you will always regret it. And for everybody that says, well, it could go down more, sure it could. And then you buy more, okay? That's the name of the game. Keep it simple. When stocks are at extremely discounted prices, you buy those stocks. You call it a day. And if they go down more and they get even more discounted, you buy more of those shares. And you have a portfolio of 10, 20 stocks, and you just like, I like this stock. You got a big cap, you got a mid cap, you got smalls, and you just, as they go down, if they continue to go down, which is a big if, you just buy more and more shares. And every month, hopefully you have your income more than your expenses, and you just funnel money in, and you build out a great portfolio, and then you'll be patting yourself on the back in the few years that, oh, I'm glad I bought that correction, I bought that bear market, I bought that stock market crash, whatever the scenario is. That's the only thing we know throughout history in the stock market. Is every single time you get those corrections, those bear markets, you have to be a buyer. And every single time you're not a buyer, you will always regret it. Always. Much love as always, guys, and have a great day.